You tap your card, you hear that little beep, and you walk away with your coffee. It feels like magic, right? Almost instantaneous. But what if I told you that in those 2 seconds, there's this incredibly complex digital dance happening behind the scenes? It involves a whole cast of characters and a journey of information that's just lightning fast. So today, we're going to pull back the curtain and show you how your credit card really works. I mean, we've all been there. You're at the front of the line, you tap your card, and bam, transaction approved. It just works. There's no cash, no waiting. It's totally seamless. And that feeling, that effortlessness, is exactly what the system has been designed to do for decades. So, what is actually going on in those 2 or 3 seconds? How does a store in your neighborhood get the green light from a bank that might be thousands of miles away to charge your account? That is the big question we're going to break down right now. To get it, you first have to meet the key players. You see, a transaction isn't just a simple point A to point B thing. Think of it more like a perfectly choreographed dance between a few different partners, all moving in perfect time. Let's meet them. First up is the issuer. This is your bank, the company that approved you for the card and sent it to you in the mail. They're the ones who are actually lending you the money for that coffee, and because of that, they have the final say. They're the ones who say yes or no. Next, you've got the card network. And you definitely know these names: Visa, MasterCard, American Express. Now, their job isn't to lend you money. They're basically the super fast information highway that connects all these thousands of different banks all over the globe. They make sure the message gets to the right place. And finally, there's the payment processor. This is the tech company that the store, the merchant, hires to handle all the technical stuff. They provide the card reader, the software, the whole shebang. They're the secure bridge that takes the info from the store and passes it on to the card network. Okay, so now that we know the dancers, let's actually watch the dance. We're going to trace the entire lightning-fast journey of one single transaction, right from the moment you tap your card to the second you see approved. But before we trace that path, it's super important to understand the technology right there in your wallet. The old magnetic stripe, it just held your data, kind of like a tiny cassette tape. That made it really easy for criminals to copy. The chip, though, that is a whole different ballgame. It's a tiny little computer that creates a brand new, one-time use secret code for every single transaction. This was a massive leap forward in security. Okay, let's follow the data. Step 1, you tap your card, and the chip sends that unique encrypted code to the reader. Step 2, the reader immediately passes that request to the store's payment processor. Then, step 3, the processor identifies your card, say it's a Visa, and routes it to the correct network. Step 4, the network instantly forwards that request to your bank, the issuer. And step 5, this is the moment of truth. In a split second, your bank checks if you have enough credit, if your account is in good standing, and it runs the whole thing through these powerful fraud detection systems. And finally, step 6, that approved message zips all the way back along the exact same path. The entire round trip happens in about 2 seconds. It's incredible. Now, this next part is a really important distinction. Understanding this is key to, managing your money. That instant approval we just saw, that's called authorization. But here's the thing. At that point, no actual money has moved at all. That comes next in a process called settlement. Let's break it down. So here's the crucial point. Authorization is just your bank's promise to pay the merchant. It's a guarantee. It happens instantly, and the purchase amount is immediately taken from your available credit, which is why you can't go spend that same money again. Settlement, on the other hand, is the actual transfer of funds. At the end of the day, the merchant batches up all those authorized promises and sends them off. That's when the money actually moves from your bank to their bank, and that usually takes 1 to 3 business days. And this timeline just lays it out perfectly. On day 0, your purchase gets authorized right away. You walk out of the store happy, and the merchant is happy because they know they're going to get paid. Then, over the next few days, settlement happens behind the scenes. And then, maybe 30 days later, that transaction pops up on your statement and your bill is due. This whole 2-step process is what gives everyone in the system the confidence to make it all work. All right, let's zoom out and look at the bigger picture here. We've seen the nuts and bolts of one transaction, but what are the broader systems that make all of this possible and, most importantly, safe for all of us to use every day? Modern security is all about layers, like a digital fortress protecting your info. We already talked about the chip card's one-time code. Well, tokenization adds another layer, especially when you're buying things online or using Apple Pay. It replaces your actual 16-digit card number with a temporary, random number, a token. So your real number is never actually exposed to the merchant. And on top of all that, your bank's fraud detection algorithms are constantly watching for anything weird, like a purchase in a strange city, to stop criminals in their tracks. It's also really key to know how a credit card is different from a debit card, because it impacts your finances in totally different ways. As you can see here, a debit card pulls money directly from your bank account. The cash is just gone, instantly. A credit card, like we've been talking about, is a line of credit. You're borrowing money that you'll pay back later. And that fundamental difference is exactly why using a credit card responsibly can help build your credit score, while using a debit card has no impact at all. So who pays for all this incredible technology and convenience, you might be wondering? Well, the system is mostly funded in two ways. First, the issuers, your bank, make money from the interest they charge on any balance you don't pay off at the end of the month. And second, they charge the merchants a small percentage of every single transaction. It's often called an interchange fee. And that little fee helps pay for everything from fraud protection to those rewards points you might be earning. Which brings us all the way back to where we started, that simple tap for your morning coffee. So, is it magic? Well, not quite. It's a masterpiece of engineering, security, and digital trust. It's a system designed to make moving money feel invisible, totally reliable, and absolutely instantaneous. It's a digital dance that happens billions of times a day, all in the blink of an eye. Kind of makes you appreciate that little beep a bit more, doesn't it?